Alright, so in this video we are going to be discussing moving averages. So a moving average is one of the most basic indicators to use and one of the first to learn when entering the stock market. So it's essentially a line within your chart that indicates the average trend of a specific number of candlesticks. So with that in mind though, there are two types of moving averages. There's an exponential moving average, EMA, and a simple moving average, which is the SMA. So the exponential moving average is similar to the simple moving average. It measures trend direction over a period of time, however, whereas the SMA just calculates an average price of data. The EMA applies more weight to the data that is more current. So the newest price has the most impact on the EMA, while an older price will only have a minimal impact. Alright, so here we are now at the chart. I'm going to turn on my moving average quick. This is an SMA. I do have an EMA up here as well. So the moving average regular, this is an MA14 as shown up there. So basically what this is doing right now is it is showing the trend of price relative to the last 14 candles. So it takes 14 candles of data and then puts in the average, and it starts to form a line during doing like direction of trend. So that's how that works. And if we also flip on the EMA line, as you can see, it's very similar, but that is going to take into consideration, yeah, it's also a 14 EMA, so it takes the 14 candles once again, but it uses newer data instead of just complete averages. It'll take the newest candle, like as we see down here. Every newer candle that pops up, it's going to weight it heavier on that than the previous ones back here, and that's how that one will form its own line. So I like using the moving averages a lot because unlike the VWAP, you can use this on any time frame you want. So as you can see here on Tesla right now, we're on the 1 minute, so each candle represents a minute, so it's taking 14 minutes of data and it's going to come up with a line for that. So taking 14 candles and then creating its line over that. Whereas if we move into the 1 hour chart, now each candle represents 1 hour. It's going to be taking 14 hours of data and then creating a trend. Or we can move into the day where 14 candles, which each one representing a day, it's taking that and it's creating a trend. So if we scroll out, we can see the whole thing. It's just creating the entire thing. And this is why I like using moving averages, because you can use it for day trading, you can use it for swing trading, you can use it for long-term investments. It's just a great overall simple tool to use.